everyone. Investors spent the first week of the new year waiting for the US labor market report. Today, their attention is focused on more important data on inflation, home sales, consumer spending, and other reports. These indicators can influence the future decisions of the world's leading central banks and the current movements of currency pairs. The first batch of data on the price level in the Asia-Pacific region has arrived today. In Japan, Tokyo's core and overall inflation data was released. Both indicators remained above the Bank of Japan's 2% target. For example, core index growth showed to 2.1% in December from 2.3% in November. This was the lowest level since June 2022. As a result, the reports have brought back the expectation that the regulator may abandon its ultra-loose monetary policy later this year. However, a possible reversal will be delayed due to a devastating earthquake in Japan. Nevertheless, the yen strengthened within the range of 143.5–143.7. In the Asian trade, the Japanese currency also benefited from its safe haven status. In addition, the US dollar is still under bearish pressure. As a result, the yen is gaining momentum against the greenback for the second day in a row. At the beginning of Tuesday, the dollar-yen pair was trading within the range of 143.4–144.3 for some time on the bearish trend. Short-term forecasts suggest that the correction may continue to the 143.5 support area and further to the 142.6 technical level. The first resistance is located at yesterday's high in the area of 143.7. While the Bank of Japan's policy looks more or less hawkish in the long run, the future decisions of the US Federal Reserve are perceived by the markets as dovish. This divergence is undermining the US dollar against the yen. In addition, central banks in the Eurozone are in no hurry to lower interest rates, with US central bank policymakers maintaining the Fed's commitment to a strategy based on current economic data. The upcoming December inflation report will have a strong impact on the greenback. Demand for riskier assets increased slightly at the beginning of Tuesday. At the same time, the majority of investors preferred to stay on the sidelines in anticipation of more data on the state of the world's leading economies. Against the backdrop of all these factors, the US dollar buy index found itself in a losing situation. It interrupted its recent rally and fell to the 102.2 level today. During the Asian session, the index remained in a narrow range of 102.1–102.3. If the bearish trend continues, the US dollar may hit yesterday's low of 102.07 again, or even test the technical support at the 101.4 mark. The next resistance level is in the 102.5–102.8 range. The Australian dollar, which usually reacts more strongly to external data, unexpectedly fell under the influence of domestic statistics. At the same time, the Aussie even ignored the recovery of risk sentiment in the stock markets, the rise in oil prices, and decline in the US dollar. Today's reports showed that retail sales in Australia rose 2%, the fastest growth in 2 years. The strong economic data negated the chances of a possible interest rate hike by the country's central bank. Inflation reports will be released later this week. They are expected to confirm further signs of easing price pressures. As a result, the Aussie dollar pair fell below 0.67 early Tuesday. The intraday range was down between support at 0.6695 and resistance at 0.6736. However, a correction to the psychological level of 0.6655 cannot be ruled out. Furthermore, the Australian dollar may bounce and continue to rise towards 0.6905 level and higher. The New Zealand dollar finished Tuesday's Asian session with a bearish trend. After a brief rally, the Kiwi dollar pair corrected within the 0.6237, 0.6268 range. Currently, there is a general bearish momentum on the chart. The pair may move towards the 0.622 support level or even towards 0.618 mark. At the same time, a potential bullish scenario suggests a move towards the technical resistance at 0.629. With several speeches from Fed Reserve officials expected in the coming days, the US dollar's movement may have a significant impact on the antipodian currencies. In addition, the news from China about the bankruptcy of the largest Chinese investment fund, Changji Enterprise Group, created a serious roadblock for the strengthening of the New Zealand dollar. That is all for now. Stay tuned for more updates with InstaForex TV. We appreciate your feedback. Please leave your questions and comments below. See you next time.